All right, and let's talk about Coinbase as well this morning. The company coming out, and its shares are up about 1%, coming out and announcing that the company is going to lay off 20% of its workforce. That's about 950 people. And this comes after the crypto trading platform cut 17% of its employees back in June. So this is on top of that. The company also coming out with some preliminary results as a part of this statement, saying preliminary 2022 adjusted EBITDA within negative 500 million loss guardrail, as some would say. In other words, it had set sort of a range of its EBITDA losses before, and it's still within the range that it had set before, it seems to be. But it does talk about fallout from unscrupulous actors in the industry having an effect on the business, acknowledging that the collapse of FTX, the charges against Sam Bankman-Fried, all of that has caused problems for people investing in crypto.
All of that's been a sentiment vacuum, too, for anybody who did want to buy into the thought of what crypto could be within their portfolio, knowing that it has more of a risk propensity than many of the other assets that they may hold. But then at the same time, looking at the promise of decentralized finance and trying to hold on to hope that it would gain value so much over an extended period of time. But within this crypto winter and the washout, that washout is taking place among some of these smaller and projects that just didn't have any validation or utilization, and then even in a regulatory framework would have probably been left by the wayside as well. And so I think as they examined some of their scenarios, as they put in the note from Brian Armstrong, that it became clear they needed to reduce expenses, increase their chances of doing well in every single scenario. They just came back to having to reduce their headcount.
You follow the space very closely, Brett. Where's the catalyst for Coinbase this year in terms of the top line? I don't see we're at mid-year 2023, and we're talking about a revenue reacceleration for Coinbase. So now you can have Coinbase, I think, just obsessed with cutting costs to raise the stock price like we're seeing here today. I would say that this may be just the first or the second round of cost cuts in what might be several rounds for Coinbase.
No, it's a great point. And I think for across the crypto industry, any company that's trying to navigate through this winter or ice age landscape, even as some of our guests have called it, they're going to look across all of the expenses, but then also in their charting a path for how to make it through this crypto winter, it's going to come on the back of where can we see any type of high margin business that customers will continue to flock into as we're trying to educate the broader market that isn't tapped into crypto yet and try to monetize those end users. And we've seen several efforts, but I think even in some of the analyst calls that have been out there, they have said that Coinbase perhaps is in the best scenario to be able to do that. But even they, as a powerhouse that they are on the platform side, still have to make cuts like this too.
Yeah, and we're going to talk to analyst Dan Dolev a little bit later on about Coinbase and his view of it. I mean, to your point, Soz, in terms of what's the inflection here, is it a question of growth or is it a question of stopping the deceleration, right? Do you just get to a place of stability? And that's where, in this environment, I don't know if that's enough, but that's got to be the first step, right, before reaccelerating and growing again.